JB Knowledge Podcast Network.
On episode 76 of the InsureTech Geek Podcast, talking about converging ConstrucTech and InsureTech for work comp with Peter Grant from Safesite. The InsureTech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Man, oh man. Another day, another week. We're in February 2022. Of course, 2 days ago was my favorite holiday of the year. It's not Christmas. It's not Valentine's Day. It's not birthday. It's Groundhog Day. That's right. Groundhog Day was February 2nd. I commemorated it by, eating a fine meal and watching one of the greatest films to ever grace the silver screen. That is right. Groundhog Day with Bill Murray. Big Bill Murray fan myself. Big Bill Murray fan. Love Groundhog Day. Another Bill Murray movie I love, Rob Galbraith. What About Bob? Remember that? That instant?
Oh my gosh, that's a deep cut.
That instant classic that was What About Bob? Baby steps to the elevator. Baby steps to the door. Bill Murray's classic in many regards. Of course, of the Ghostbusters legend, and the new Ghostbusters movie was pretty decent too. Of course, Bill Murray made a cameo in that. He's still out causing trouble. He's a good bit older now, but love me some Groundhog Day. But we're not talking about that today. We're actually having on a guy that I've had on my other podcast, Contact Crew, that I've talked to before. I've referred to him as the Hugh Jackman of ConstructionTech, but he's just as equally involved in InsureTech. He tried to make his way in Australia and realized very quickly that the land of opportunity and free enterprise was actually over here across the pond a little bit. So he wove his way over from Australia to America, the land of milk and honey. Peter Grant, how's it going, Peter?
Great, thanks, James. What an introduction. It's fantastic to be here on the second podcast of the JB Knowledge Network. Excellent to be here. Thanks for having me.
Yeah, glad to have you. We're going to talk all about the convergence of InsureTech and ConstrucTech, how you guys started with a ConstrucTech product on environmental health and safety, and then you actually moved into building an MGA that provides work comp tied to the technology, and that's going to be a really great conversation. Of course, with me, my illustrious co-host, the most interesting man in insurance, my fellow Texigander. He loves Texas and Michigan like I do, Rob Galbraith. Rob, how's it going?
It's going well, James. As we're recording this, we kind of in the deep freeze here in Texas. Nothing like most parts of the country dealing with severe winter weather, but we have had 2 snow days with no snow here in San Antonio. So kids are home. They're loving it. They are wanting the snow. Meetings, Zoom meeting fatigue still goes on for those of us in the working world. But kids are happy.
They may be happy. Mine are home yesterday and today. Totally pointless. The roads are completely dry. There might be like a little 6-inch patch of ice somewhere on a road somewhere that somebody's tire slipped on for a microsecond. But other than that, it's fine. But no, we can't go to school. That's okay. That's all right. I'm in the office. I'm in the studio here in beautiful historic downtown Bryan, Texas, right next to College Station, the heart of Aggieland, home of Texas A&M University, one of my favorite places on earth. Not my only favorite place, though. Of course, I love Peter's home territory, Australia. When I first landed there, and I didn't make my way to Australia until a couple of years ago. I've been obsessed with Australia my entire life. When I got outside the airport in Brisbane, Vegas, and in Sydney, I knelt on the ground and got on my knees and kissed. It was just Brisbane, Vegas, not Sydney. In Brisbane. I knelt on the ground and I kissed the grass and I said, "I'm finally here."
I'm home.
Yeah, man. I have a nickname. I'll go ahead and tell my podcast listeners I have an Australian nickname. Peter, have I ever told you my Australian nickname?
I haven't heard it, James. What is it?
It is Motto. M-A-R-T-O. Motto. Makes total sense for a guy named James Benham, right?
Yeah, Totally. Yeah. Motto.
I'm in a CEO forum. I'm a member of a couple of CEO networks, and I'm in a forum of other software as a service CEOs, and 3 of my forum mates are Australian. So of course everybody had to get an Australian nickname. I jumped at mine. I've for many years have had an Australian alter ego, Shane Martin, who sings karaoke only in Australian. And Shine's favorite, I mean favorite song to sing is Love Shack by the B-52s. So because of that, because it's Shane Martin, I got nicknamed Motto for my alter ego's last name. So go figure that story out, Peter.
Motto checks out.
See?
Yeah, it's all you need, and then that'll stick with you for life.
I know. It's
on
how
it's
how they refer
your
to
visa
me.
into Australia. That'll be on the visa for sure, no question.
Like Australians nickname everything. They don't name anything what it actually is called. The fruits, vegetables, buildings, locations, people, doesn't matter. You're gonna get a nickname. Galbraith would be maybe Gabby, or it's not always
Robbo.
obvious.
Yeah.
Robbo's the obvious one, but it would most likely be something more obscure. But you never know. Don't forget out there in listener land that you can subscribe to this podcast. If you're watching us on any of the video streaming locations like LinkedIn or Twitter or Facebook, or you're on Vimeo, you can subscribe to the audio podcast by texting Geek Out to 66866. That's texting Geek Out to 66866. And of course, if you want to hit the website up, it's InsureTechGeek.com. But that's InsureTech spelled the correct way. InsureTech spelled the same way InsureTech Connect spells it. That's INSURETECH, InsureTech. Peter, we have a bit of a dispute in the InsureTech community over how to spell InsureTech. I believe that our podcast and InsureTech Connect, which is the largest InsureTech conference in the world, have it correct, and they're spelling it with an E. Just putting it out there.
Yeah, I think we had a healthy debate about it internally. I'm not even sure where we landed, such as I think the ongoing debate. But you're right. If you're setting the trend and you've got the viewership and you've got the authority to, I think, stamp what you think is the right way to spell it.
Yeah.
But I will say this: whenever you put it into a Word document or a Google Docs, it's still underlined with the red squiggle. So we need to tell someone over at Google the right way to spell it. Then you will truly have the upper hand.
And that's really the key, because it's not really about Webster's dictionary anymore. It's about what the spelling autocorrects put you as.
Exactly.
I mean, it's a mess. So with us today is Peter Grant. He's CEO at Safesite. He's also super involved in their sister company, Foresight, which is an MGA. We're going to talk about both Foresight and Safesite today. He is Australian. He does live here in the United States. And before we talk about Safesite and Foresight, Peter, I just want to talk about you for our listeners here. You went to Somerset College Gold Coast. You went to Griffith for your bachelor in civil engineering. Got a degree in civil engineering and business management. When you went to school, what attracted you to civil engineering and construction? What was it? A family member in construction? Was it mom, a dad, an uncle? Or did you just like the idea of it?
I think the seed was planted in my mind probably when I was a young kid playing with Legos, or Lego bricks, I think is the official term. And I would spend hours and hours and hours and hours playing with Legos. And my parents sort of said, you should get into construction or get into engineering. And so that sort of thread, it was either that or become an astronaut. Unfortunately, there wasn't a very direct pathway to becoming an astronaut as an Australian back then. Maybe isn't now, maybe it's improving. So when it came to putting in my submissions for university, civil engineering was the top. I wanted to couple that with some business acumen as well, so hence the double degree. And so really enjoyed my time civil engineering and learning about structural engineering, and how the buildings and these monoliths that we see in these big cities, how they're all put together, tunnels, all of these mega projects around the world. I think they're just fascinating. And when after working in those industry or working in that industry for 6-7 years, working on some massive projects, civil infrastructure projects, commercial projects, it was great to see that the civil engineering mathematics and theories being put into practice out in the field, and how those structures go from ideas to pen and paper, to the calculations, to the factors of safety, to then how you actually have to build this, and actually how the builders have to be involved in the design process. And then ultimately, at the end of the day, when you cut the ribbon and you've got a massive structure that has been completed for the benefit of so many people, whether it's public infrastructure or private companies, I think that's just a fascinating part of society. And I've really enjoyed my time in the civil engineering world.
Yeah, it's really amazing the size, scope, scale of projects now in civil engineering. The size of the highways and tollways and dams and bridges it's really amazing. And you're truly transforming. I call it, when you're in civil engineering, you're in the terraforming business, right? You're bending the planet to your will. It's pretty amazing. Now, I'll say Lego is a critical background for many of us. I am a Lego fanatic. I kept every Lego set I've ever owned since I was 5 years old, and all the instructions. During COVID, I spent a good bit of time building out. That's my Lego. That's part of my Lego city. I reconstructed the entire Lego city in my home office. Lego got many of us interested in building. You worked as a graduate engineer and construction engineer for Leighton Contractors until 2014, and then something happened and it triggered you to found Safesite. What was that something?
Sure, yeah. So unfortunately, had my best friend at the time passed away in a workplace accident. A tragedy, obviously, but a day doesn't go past that I don't think about Stu. And certainly, going through the stages of grief, and certainly the frustration about why this completely preventable incident occurred in the first place, was due to lack of safety standards and lack of compliance with those safety standards. So I knew through my civil engineering project management journey as well that despite working at Leighton Contractors, tier 1 contractor in Australia, all the resources, top resources that you could have in the industry, we still had pen and paper safety systems. We still had severe injuries and deaths within our teams and within our business. And so combining those two, I guess, seeds together with my understanding and passion for what technology was available and where technology trends were heading, myself and my co-founders, Dave and Lee, put our heads together and said, well, look, what can we do that combines all three of these elements and do something that's really exciting and really forward-thinking for ourselves, so that we can prevent injuries and deaths in these high hazard workplaces and make sure that everyone gets home to their families and friends at the end of the day. And that was Safesite. That's what emerged from that genesis. And what Safesite V1 was essentially a hazard recording, communication and resolution tool. That's it. And we felt that alone could really move the needle on compliance with hazards, hazard visibility, and ideally push down the amount of incidents that are occurring in these places.
Awesome. And I know, Rob, you've got a great follow-up there on Safesite and its sister company.
Yeah, Peter, it's great to see you again. I love, that after this tragic occurrence, that you guys, really worked hard to do something about it, right? To not let that death be in vain. And I've met so many other founders in terms of wearables and others, right, have similar stories. So, applaud you for your efforts to make workplaces safer for those individuals, and certainly, right, families, loved ones, and others. Would love to have you tell us a little bit more about the Safesite platform, the type of data it captures, how it's used. And then, one of the things I find interesting from my insurance background is that you really went beyond just being a SaaS technology company offering a platform to help improve safety at construction sites and others, but you actually went the further step to create your own MGA, which is Foresight, which is an insurance offering that leverages the insights that you get on the Safesite platform. So we'd love to have you tell our listeners a little bit about how Foresight came about to leverage the insights that you were learning from the Safesite platform.
Yeah, absolutely. And I know, we've probably got, 30 minutes on this podcast. I'm going to condense down probably 7 or 8 years of business development, very windy road to get to where we are today. And make it succinct, but, your first question, what do we do at Safesite? So we're not just a technology, right? Certainly the Safesite mobile app for use out in the fields, for completing safety activities, completing safety compliance. Basically, a pop-up occurs that shows you exactly the safety initiatives that an individual or a team has to complete within that day or that week. So we try and make the user experience out in the field very easy for anyone to pick up a mobile phone and engage in their safety program. It's really one of our underlying philosophies is that to move the needle on safety, you need everyone in your organization to engage. And we develop the mobile app first, as I mentioned, and we make that the channel that everyone can engage in as little as 5 minutes per week. And if you can't, as an employee or as a supervisor or as a manager, allocate 5 minutes a week to your safety program, then you really have to reflect on how much you want your business to be sustainable. We have the desktop portal, which aggregates all of that information for analytics and reporting purposes. You can do your OSHA 300 log there. We just released a really cool feature, which is called campaigns. So if you come into us and say, I'm a roofing contractor in California, we will automatically populate a campaign for you and your teams out in the field, and that will have all of the relevant, it will have meetings and inspection templates that are filled out on a cadence of your choosing, say weekly, that has content that is relevant to the risks within your industry. So now no longer do you have to populate a system, we automatically do that for you as part of our service. And then the third part, so that's the technology side of Safesite, mobile app, desktop portal. And I can talk about the predictive analytics side of it. I can talk about, a lot of the features there. But what's really cool about the service that we provide at Safesite is what we call our safety success service. And so we partner companies with our safety success team. And these are safety professionals that are also technologists. And so they are charged with helping a company go from 0 to 1 when it comes to digitizing their safety program. We've brought on about 5,000 companies in the US onto the Safesite platform, and they're not just construction. The construction represents about 50% of our customer base at the moment, but the rest ranges from manufacturing, agriculture, logistics, and we've even got some pet shops there. We've got pasta farms, we've got book binding factories, all sorts of things. We've seen a lot of different companies and organization structures and management structures. So it's really, we get in there and we understand what the company wants to get out of Safesite. We help them review their loss history and their claims history and say, from an industry level, here's what you should be targeting, but from your experience, here's what you should be targeting. And we make sure that the campaigns that are baked into the Safesite system are appropriately targeting those risks, and we get the right people involved at the right time during the right workflows and activities out in the field in the safety program. And we provide all of the onboarding support, all of the training, regular check-ins against the expectations. And so call it hand-holding, call it what you will, but we obviously have a vested interest from a SaaS side and from a Foresight side that every customer or policyholder is fully engaged in the Safesite platform, and we remove any hurdles or reduce the friction as much as possible for these companies to get engaged. So that's sort of a high level of the summary of the services that we provide. So if I'm winding the clock back 5, 6 years ago, we knew that digitizing safety workflows, it's not exactly rocket science. It's not exactly a unique thought, right? So there's certainly a landscape within the marketplace of companies digitizing safety workflows. And to a certain extent, I believe that a lot of the workflows will be commoditized. We have some strategic initiatives around, I mentioned campaigns. We're less focused now on compliance. We're more focused on behavior modification and micro touches rather than your traditional OSHA-based workflows. And that's how we differentiate ourselves from a product point of view. But if we looked at the business model, it essentially is a race to the bottom when you're commoditized, you're dealing with a commoditized product. we always knew that through our case studies that we had the ability to reduce incident frequency within our customer set. And we knew that with our predictive analytics and our data capture and the way that we score companies, that we could have the ability to predict loss outcomes. And so we started really galvanizing around the ability to reduce loss, the ability to predict it. And we knew if we did that well, the insurance industry would inherently find that valuable, and we can build a business model around that. We have what's called the Safesite score, and I would say that is the glue that binds the two businesses together. Safesite and Foresight are symbiotic in nature, but the glue that binds are the Safesite score. Every activity, every action that is completed out in the field or not completed out in the field within Safesite contributes to the Safesite score. We capture about 80 data points at the moment. That's obviously increasing. And every data point has an impact on the Safesite score. And think of it as your your credit score or your Moody's score for safety. And it is a letter grade. It's A, B, C, or D, and plus or minus. And that gives us an indication of how engaged that company is in their safety program and how well they're executing on their program. And it is all leading indicators. So, for example, if you have an incident or a claim that doesn't reduce your score, what will reduce your score is the response to that incident. So if you don't respond correctly and try and mitigate that claim from happening again, then your score will go down. So we put a lot of effort and a lot of thought into the Safesite score because we knew that that was an essential differentiator for us and a way for us to sort of crutch the impact that we have and use it as a translation tool for underwriters in the workers' comp space. So we obviously explored a few different business models within the insurance side of things. We ran a brokerage for 2 or 3 years. We brokered about $6 million of workers' comp premiums. We had some partnerships with some service contracts with some insurance carriers, and that was great. But again, we felt that because we were able to move the needle on incident frequency, we wanted to share in the upside that we're able to deliver. And so there are incredible barriers to entry to becoming to becoming an underwriter. So I will correct you, we're not an MGA, we are an MGU. Subtle distinction there that I'll clarify. We do the underwriting in-house. And we found, because of the Safesite score and the advantage we have with that, we felt it's super important that we do the underwriting in-house and develop that competency and capability. And the value proposition that we bring to the workers' comp space is that if every policyholder gets the Safesite technology and services for free, it's mandatory to engage in the Safesite technology and services. But if you do engage and you get a high Safesite score, that will immediately translate to reduction in your workers' compensation premiums. And so for the first time, we're able to basically put the power to drive down insurance costs back into the hands of the employers. And when you click those incentive structures together, business owners or CFOs or whoever's signing the workers' compensation insurance contracts, if they have the ability to drive down those contracts by getting their teams more engaged in safety, that's a top-down incentive structure, and we have the bottom-up technology for the teams to be able to engage in safety. And we have now this symbiotic relationship where Safesite's free. We don't need to make money from Safesite. We make money from profiting off the underwriting. And we launched Foresight in October of 2020. Time's gone so fast during COVID. We launched it in October of 2020. We've had an insane amount of growth. We started in 6 states in the Southwest. As soon as we're not direct to market, we go through broker channels. We have had an insane response from those brokers saying this is an amazing product, and it allows them to differentiate their services for their clients. And we've seen incredible growth. We recently closed our Series B funding round off the back of that growth, $39 million coming into our topco. It's investing both in Safesite and Foresight. And so it's fair to say that we're going to be continuing to invest in our expansion of the Foresight program and the technology that delivers the value within that program.
Do you end up with an adverse selection problem? You're doing something unique. So many people have talked about premium reductions in exchange for use of technology. You're actually doing it. So you're literally lowering premium in exchange for using and good use of the software. But you're also from what I understand, and this is just from the conversation we just had. It sounds like you're going to non-renew someone who doesn't use your software. Like they have to use Safesite, and if they don't use it, then you'll non-renew them. Because of the nature of this, are you ending up with a bit of an adverse selection problem where the majority of customers you're getting are those who cannot get affordable premium from mainline work comp carriers, and so they're going to you because they've been either non-renewed or quoted out of the market elsewhere, and so you actually end up with the worst risks, and then you've got the most work to do to get them up to speed?
No, I wouldn't say that. I can see why you may be thinking that. But certainly we win a lot of business on a underwriting appetite and competition basis upfront. Not every single when we're writing policies, not every policyholder has already had experience with Safesite, so we have to basically assume or go through our standard underwriting practices when we do underwrite them. But there is, because we do an aggressive screening process, because there is the expectation of engagement in Safesite, because we know the impact on an aggregate that Safesite will have, underwriting takes into account the expected lift that Safesite will bring to their safety program and reduction in loss ratio. So we can get competitive and win, and we do win a lot of business away from incumbent carriers because we can be very competitive on price upfront, regardless of their existing engagement in Safesite or any other technology. If businesses have had bad loss experience and they do get kicked out of other carriers, non-renewed, we do see that as an opportunity. Obviously, we don't just take them without having a closer look. But if there's a trend or a history of bad incidents, that's obviously a red flag. But if they've had one or two serious incidents and they've addressed those, and they might have happened 2 years ago because it's 1 or 2 years ago, but as you know, with a mod, it sort of hangs around for 3 to 4 years. We actually like customers or policyholders that have a mod of between 1.2 to 1.7, because they have felt the pain of not investing in safety. They want to get that mod down. They need help getting that mod down, and they're willing to invest their time and energy into doing that. And so we're there with all of the solutions for them to be able to. We expect to end up with actually a cohort of policies or a book of policies that actually starts over time to skew to the right in terms of performance, as in better performing, because we will be accepting but then flushing out companies that don't adopt and engage in the safety program. By the nature of how sticky the Safesite solution is, and how fantastic, frankly, the solution is at operating the safety program, it is sticky for clients. And so there is a friction to move away and a cost to move away from Foresight, because they will lose the Safesite technology and services. So we expect the book to continuously improve in terms of loss performance and quality over time.
You also, look, lifelong technologist, right? Been writing software.
Sure.
I've been in this business 21 years now. I love a good problem, right? I mean, if you have a higher mod rate, a lot more opportunity to improve. It's hard to take like an A player and take them to A+. It's really interesting to take a B player and get them to an A, right? And that's really where you can help move maybe a B- player to A or A+, because they've never tried using standardized systems and processes, never taken a consultative approach. So I like what you're talking about with your journeys where you're. I'm sorry. Did you call it journey or path?
Campaigns.
Campaigns. I'm sorry.
Yeah.
Campaign.
Yeah.
I apologize. So you can take your campaigns, and it is a campaign. Like, what's the outcome? It's really starting. Old Simon Sinek. Start with the end in mind, right? Like you're saying, here's the end result we want. We're not just going to do these 5 software tasks because that's what you're supposed to do. We're going to do it because we want to impact the outcome, right? That's exciting. Rob?
I want to ask a quick clarifying question. So I've had the privilege of actually seeing a demo of the Safesite technology, and was very, very impressed with all the things. I know for our listeners and our viewers, right, we're unable to do that demo, but I can kind of personally attest, being very, very impressed with what you and the entire team there have developed. So my clarifying question is, you mentioned Foresight is the MGU. In order to get access to the Safesite technology, people have to become a customer of Foresight. Is that correct?
We still have our product on the market, so it's a freemium product. You can go download Safesite for free now and start using it. You can even pay for the premium level, which gives you access to some more advanced analytics. What you won't get on the open market or the SaaS product is the safety success service. We do apply that to some enterprise contracts, but we usually invest that service primarily in the foresight side of the business. And obviously there's an upsell, right? If companies are engaged in Safesite, they have a good Safesite score. We say, hey, you're a perfect candidate for the Foresight program. Tell your broker about Foresight.
You mentioned, obviously, we've talked about construction, but you mentioned several other industries as well.
Yeah.
And so, who do you think are the I guess ideal customers? Is it that high hazard industry that maybe is paying quite a bit from a work comp, or might be looked on different from traditional carriers, where because of the insights you're able to glean from the SafeSite platform and the scoring,
Yeah.
that you're able to possibly, save them quite a bit of money as well as improve their risk profile over time?
Yeah, it's a good question, right? There's a number of different ways to slice and dice the market, right? But from a technology point of view, the SafeSite platform works. It can be one individual contractor just completing their actions in the field. The system is built to be able to be handling multi-region, multi-division. It is incredibly stratified, and there's a lot of hierarchy that you can bring into the SafeSite platform. So we have companies with 2,000 employees on there and companies with one user. So in terms of the scale of business, it can it's very adaptable, but obviously up top end of town, that's longer sales cycle, higher expectation, integrations, customizations, and that's not our business. We're not trying to make money out of customizing SafeSite for large companies or large GCs. So in terms of where we focus, it really is middle market, right? And in insurance term, I'm hoping all the listeners are fully understanding. Well, even with insurance, there's different definitions of it, right? And so we say anyone with 20 to 200 employees is sort of well within our ballpark. We do have some lower risk class codes that have 2,000 employees that are on Foresight and SafeSite. But I would say they're on the lower hazard. Obviously, their rate is a lot lower in terms of their premium. We can talk about industries or we can talk about segments of the market, but I really think when it comes down to the profile, and we sort of touched on this before, just then, James, we're looking for companies that really want to improve. They either have a pain point, they're paying too much for workers' comp, or they want to improve their safety because they know and they understand that it helps them become a more sustainable business, helps them grow their business. And so as when we're explaining the Foresight program to brokers and explain it to their clients, we make sure that they fully understand that this program isn't for everyone. We're going to help you go from 0 to 1. And if you're not willing to come on that journey, then you're not suitable for us, and that's fine as well. But you for those companies that do understand that, have the pain point or the willingness, they're perfect. And that just happens to be in the middle market because no one has really come to the middle market from a product perspective. I mean, you look at incumbent carriers, so sure, they have risk management teams, fantastic men and women out there helping these companies to improve their safety. But sending a PDF of an inspection or showing up once or twice a year to consult or review the project company operations in terms of safety, that's old school, right? The SafeSite technology delivers so much more value. It's essentially a new paradigm of value that we're able to deliver instantly and real time to every single one of these policyholders at scale and economically. So for the first time, we're providing all of this tremendous value to brokers and the middle market that has never been seen before. So that's fair to say that's our target market. And within that space, obviously, we're higher hazard industries again. So we're not doing anything. We're not doing retail, for example, because their workers' comp costs are relatively low. We're not going to have a big impact with a safety program on probably strains, paper cuts, things like that. But where we do have the biggest impact is those high hazard industries where they do have a high focus on safety. They do have high insurance premiums in terms of their turnover.
it's interesting to me that the role of the technology is almost intrinsic and at the fabric level of this entire effort. Whereas, Peter, when you and I spoke years ago, when we first
Hmm.
met, it was all about being a SaaS company, and it was all about licensing an app, and now it's about something
Yeah.
completely different, right? I mean, it's been a really big evolution. Now we've seen the same thing from many insurtechs evolving from developing tooling for risk management to really competing in the market, literally creating new markets. It's starting out either as MGAs or, in your case, an MGU, and then in some cases going as far as to raise capital and become a carrier and get licensed, or buy somebody's paper and acquire their way into the
Yeah.
carrier market. It's just really fascinating to me that technology is still intrinsic to this, right? Because you're able to substantially mitigate risk by knowing what's going on, but also you're able to modify behavior and
Hmm.
enforce and encourage good practices through technology. You're using the technology as both a consulting tool and as a risk mitigator.
We call it Safesite as a platform, right? The toughest thing as a startup, right, is having all of these fantastic ideas. It's one thing to say that we want to be all-encompassing safety platform. It's one thing to say we want to have predictive analytics. It's one thing to say we want to underwrite, right? But where do you invest your time and money and energy, and in what sequence? And knowing what we do know now, we probably could have shortened this 8-year journey down to 4 years,
Yeah.
4 or 5 years, right? Maybe 3 years ago the industry wasn't ready. We've got very forward-thinking partners on the insurance side that really believe in not just what we're doing now, but the potential of the platform, right?
Yeah.
And the technology that we're delivering, right? There's so much more optimization that we can provide internally within SafeSite and our safety success process in terms of productizing that. But we're a platform, right? We plan to integrate with other IoT and wearable companies and give them a way to tap into the insurance value proposition as well. So you got, I saw Kinetic Insurance launched, I think, about a month or two ago. Really cool product. Really cool that they've been able to build an insurance product around that. It's great to see that the industry is really thinking about this InsureTech 2.0, where you're not just trying to optimize the acquisition of accounts. You're not trying to go direct to market. It's not a CAC game. It's really a value-driven game and a loss improvement game. And someone like Kinetic, someone like Safeside are really focused on that, and it is through technology. And as you know, James, the industries that we're working with have been so technology resistant. You've been beating the drum now for as long as I've known you, and surely much longer. And still, there's 40 to 60% of companies in our target market that are not digitizing their safety program. It's madness.
Yeah,
But
it is madness.
yeah,
But Peter, they understand comp because they got to pay their work comp bill. They understand
yeah,
comp, and if they can say, whoa, wait, you mean I can get a better initial rate and then I can get even better on renewal if I
yeah,
just use this app, and the app's free, even though really it's baked into premium, and you're paying for the technology through your premium. Um,
yeah,
that's an argument that you'll win probably 10 times more often than hey, buy this app because it makes you safer. You're saying,
oh
hey,
yeah,
buy this insurance because our technology and our process and our people make you safer. That's a lot easier argument to win with a contractor. I mean, they hate spending money on technology still after all these years. And Peter, it's been, get this, I started speaking about this and really pushing this topic in 2006. So it's been 16 years of beating on this drum. They hate spending money on tech, man. They hate it.
yep,
But
yep.
it's a lot easier to explain it to them in insurance and risk management terms.
We're removing the cognitive and financial dissonance between investing in safety workflows and the impact it has on your bottom line as a business. It's been so hard to really attribute those. It's like, why am I doing this OSHA inspection on a weekly basis? Like, it's just like, why am I doing it? It's just a pencil whipping. But now because of the way that we're using the technology to bind them together, the SafeSite score, our underwriting model, it's really resonating, and it's really we talk about incentive structures, they're all aligned. But this, like, this is sort of just the beginning. We see us as much as you've been a pioneer, James, in getting technology adoption out in the field. We're essentially pioneers in designing and developing and promoting these types of programs to the industry, both on the insurance and the broker side and on the industry side, because they're not used to it. They're still thinking. A lot of them are thinking the old ways. It's like, give me the lowest price, give me the lowest price. I'm not talking to you. But the smart brokers and the forward-thinking brokers, our top-tier brokers, really get the amount of value that this provides, and they're so excited to give us their best accounts and work with us to get their best accounts the best value possible, because they know that those accounts will invest in safety.
Yep.
But there's so many cool levers and strings we're going to be able to pull in terms of pricing. Different states and different regulators obviously have different opportunity for programs that we can design and push out there. So really cool things that we're working on in terms of pricing and pricing models, and how the score can impact the policyholder in a lot more shorter cycles. I'll leave it at that.
Yeah, that's awesome. Well, I'm excited to hear about that. I know Rob is too, but we do have to wrap our conversation and move to talking about a little bit of InsureTech news. Rob, I know you've got a couple of articles that came up this week.
I do, yeah. So, yeah, just want to congratulate Peter on his Series B raise. That was announced a couple weeks ago, so folks can go check that out, of course, and see about their what they're going to do with the money as well. So, really looking forward to kind of your growth and expansion, Peter. Two interesting news articles for me this week. One is from Converging, our friends over there, saying that the challenger bank Monzo, which is really big in the UK, and for a lot of my friends over across the pond, as they say, really talk about Monzo and Sterling Bank and others. So they're officially live in the US. And it's been an interesting time. We talk about fintech, and they're a little bit ahead of InsureTech and the digital banking space, and a lot of open banking regulations have led to some of these what are known as challenger banks or neo banks. And they were, really popular for the first few years, but they've actually had a little bit of a tough run lately. It talked about in 2020, the valuation for Monzo dropped from £2 billion to just £1.25 billion, and had to lay off employees. And I know we talked about, for instance, Root recently having to do this. But they recently got a fresh round of funding from the Abu Dhabi Growth Fund that put their valuation at $4.5 billion. And so they have over $5 million customers in the UK. So they're coming here to the US. And it's interesting timing as well, because the Allianz backed Challenger Bank in 26 actually announced last month that they are leaving the US market. So kind of an interesting company to kind of watch here in the US and see if Monzo is able to take hold or not.
Yeah, it's not always it's not automatic, and it's not always easy, is it?
I think they're facing an uphill battle for sure. Now we are seeing kind of a reduction in a lot of community banks, right? The biggest banks are continuing to get bigger. So they seem to be swimming a bit against the tide here in the States, but we'll see if they can have the success here and lasting success that they're trying to achieve in the UK. And then the other one is a little bit more kind of bread and butter insurance article that Allstate announced that the Q4 results dropped, or Q4 profit dropped 50%. And I found it really interesting. So we know that a lot of companies saw a massive decrease in driving following the pandemic, everybody staying at home rather than driving into the office. And a lot of them even gave refunds or rebates or dividends back to consumers to kind of rebate that. So we're seeing an increase in driving activity, but Allstate noted that it's actually less about an increase in frequency. There's some of that, but actually a lot more about increase in severity. And they acknowledge that there's actually a lot less driving during rush hour, right? That kind of office commute that many of us had done. But they're saying that now there's more open roads, people are driving faster, and they're causing more severe collisions, and that's catching them both on the property damage side as well as the injury side. So I thought that was quite fascinating. They mentioned rates are going up. Obviously, there's inflation with used car prices, parts, you name it, that are affecting the overall economy as well. So it's been a tough time for personal auto for quite some time, and we had a little bit of a reprieve there, I guess, with the pandemic, but overall, it's been difficult to make money in the segment for a number of years.
Yes, yes. And I wondered at the time if they were being a bit premature in issuing rebates, refunds, and I was like, "Are you sure you want to do this quite now?" I felt like it was kind of like an overreaction, and we saw one carrier do it, and then 2, 3, and 4 followed, and I was like, "Man, this seems grossly premature," because when I was out driving, which was one of my few escapes from the house, was to go on a drive at the time. I just saw a bunch of nutty behavior, and that's the same thing. We've been talking about the increase in severity for a little bit. People just are being a little more risky. Now, maybe it's a fait accompli. Maybe it's a carpe diem, seize the day, or it's a fatalist perspective. But people are feeling a little more risky, a little more frisky and risky. I had 2 news articles. One that I've done business with, Coalition, fantastic cyber security InsureTech that has bundled, very very similar to what Peter's doing. They have bundled their insurance product with a suite of cybersecurity tools. They have launched some more product backed by Zurich North America. They're now offering directors and officers and employment practices liability. Of course, along with the insurance came a suite of new tools and features to all their broker partners and their clients that came along with us. And I can tell you, Coalition does a pretty amazing job of providing a really effective, good tooling to their clients and encouraging them to use it along with their insurance. So, Peter, I don't know if you use Coalition or if you've seen them, but it's a pretty nice package of product and insurance.
For everything I've heard, it's not it's a great product, and obviously totally in full support of deploying services and technologies that allow them to get more confident in underwriting and then drive down pricing. I still think cybersecurity is, I don't know how they go to sleep at night knowing the potential downside, but obviously they've come to terms with that, and their investors have too. But really, really well done to the Coalition team.
And because I'm a pet fanatic, I'm a dog fanatic. I have 10 animals in my house, 3 of whom are dogs, the other of whom are furry little creatures, mainly chinchillas, guinea pigs, hedgehogs, rabbits. The rabbits are jerks, by the way, but everybody else is pretty cool. The chinchillas are the funniest and the most mischievous. The hedgehog is the most shy and private. Imagine that. But Revolut, Revolut, and again, this is from FinTech Global. Revolut dips his paw into pet insurance. They entered the InsureTech market through the launch of a pet insurance product, which is yet again something interesting. It's going to be available in the United Kingdom, so our British listeners can get it. You can manage everything related to the pet insurance in one place. Make a claim, view policy documents, access vet support. If you're using the solution, you can pick a monthly subscription, and they'll provide up to £10,000 a year in annual vet fee coverage. They are not fixed price. The cost will depend on age, gender, breed, location, but pretty neat InsureTech product for those of you who want to manage the cost of all of your animals. I would be interested in how they view volume discounts because, Peter, you're going to laugh at this. I am getting pressured by the blonde mafia in my house to get a wallaby. Now, wallabies.
I don't know what the laws are about having Australia's national animal.
Dude, you can do anything in Texas.
Yeah, you're right.
You can have a.
It's not Tiger King.
Yeah, exactly. So you can do anything in Texas, but female wallabies are actually quite small, and they are routinely house pets. Tell me about the wallaby. Is this an animal that's gonna box me and then slice my stomach open like a male kangaroo?
No, I mean wallabies are cute as hell. As you say, you need to distinguish wallabies. For the listeners who don't know, they're essentially a small, probably a third to half the size of the full-grown red kangaroo. As you say, James, when I was growing up, we actually nursed them. There'd be bushfires or there'd be their mothers run over by cars, and we'd actually nurse wallabies back to health. They'd hop around the house. You'd put a diaper on them, but they'd hop around the house. As tempting as it is, you shouldn't put your tools and your wallet and your things in their pouch, because obviously that's a hygiene situation for the wallaby. But so you might need to tape it up for the sake of the kids. Yeah, they're cute as hell. They're really nice temperament, and if they've been house trained, you can really enjoy it. I'd be interested to see the dynamic that it has with the chinchilla.
Yeah, exactly. Like does the South American chinchilla get along with the Australian wallaby?
Exactly.
This will most likely be an experiment that will be run in the Benham household in the near future, because I am being severely outvoted on this particular issue.
Do it. You should call Pixar, because I feel like that combination of animals is a Pixar movie waiting to happen.
It totally is, man. It is a Pixar movie waiting to happen. I tell you what. Yeah, they're pretty cool. We went and hung out with some wallabies at a exotic game ranch here in Texas, and of course everybody's like, "Oh, we have to have a wallaby." I'm like, "You have 10 animals. You don't hang out with half of them. Like, don't no." But I think long term, like many battles, most battles, I'm going to lose this one. The question is, how do they fare on small airplanes? Of course, being a pilot, I always worry if the animal will do well. The cool thing about wallabies and kangaroos is if you have a pouch and you offer it to them, they will literally jump and claw right in and just go to sleep. And then you just zip the pouch up and you're done. Even when they're adults, like they understand the pouch concept, don't they, Peter?
Something primitive in their DNA, but yeah, they see a pouch, they love a good nap in a little pouch, a little hidey hole. It's secure from the world. Everything could be going on. Hell could be raining down, but if there's a little pouch, they'll jump in there and they'll go straight to sleep instantly.
I wouldn't believe it if I hadn't seen it with my own eyes. A wallaby saw a pouch and went whoop, and jumped right in and flipped upside down. It's awesome. Well, Peter, man, you're a gentleman, and you are an inspiration in ConstrucTech and InsureTech. A big shout out to your co-founders. If you want to name them, I just want to throw a shout out to them.
Yeah, Dave Fontaine heads up the Foresight insurance arm. Leah Pell, our CTO. We've been in this journey together, and shout out to all of the teams at Safesite and Foresight. We've grown incredibly rapidly over this last year. We're all remote, and everyone's done a really good job at managing the chaos and getting the company swimming in the right direction. It's like I said, it's very exciting over here.
Yeah, well, we're excited to have you on the show. Rob, any closing comments?
Just echo what you said, Peter. I've been privileged enough to have some touch points along your journey, and so just continue to applaud your success. And I love, James, you kind of touched on this, but we're seeing a lot more in this trend of, we were using the pet analogy, right? Eating your own dog food, right, so to speak, to say, hey, I have a technology that I think can improve risk and exposure and lower losses, and I'm going to prove it by having an insurance part of that equation. So kind of mixing almost insurance as a feature, right, but designing a broader product offering around that's a little bit more holistic and that's really tangible for your customers. We always say insurance is kind of a set it and forget it. And it's like, I buy it, but I hope I don't never have to use it. And I think that paradigm is absolutely shifting to where, folks like yourself, and now we're seeing with other companies as well, really become trusted partners that have many more touch points, but it's much more tangible to your customers rather than that insurance policy that they filed away that they hope they never have to pull out to call the 800 number on to file a claim in the future.
Awesome. Well, thank you, Rob, and thank you, Peter. And thank you out there in listener land for listening to yet another episode of the InsureTech Geek Podcast powered by JB Knowledge, jbknowledge.com. All about technology that's transforming and disrupting the insurance world. I've been your host, James Benham, jamesbenham.com. My co-host, Rob Galbraith, endofInsurance.com. Big thanks to Jim Greenlee, our podcast producer, Kara Daltonaro, our creative producer. And thank you for joining us today. We're taking you on a journey through insurance tech. So enjoy the ride and geek out. See you next week.